Hi, and welcome to Trade of the Week. This week's trade, selling sterling against the yen, is an exercise in self-humiliation. It's a classic example of the failings of an impulse trade without a plan. The first problem was the lack of strategy. All I had was a view that equities would continue to fall, and that as such, this would favour a stronger yen. I'd been watching the 100-pip fall in sterling yen for the past hour, along with lower equity prices ahead of the official open. Then, in a moment of sheer madness before leaving for the gym, I pressed the sell button, shorting £1 at 134.14. If I only did one thing right all morning, it was to acknowledge that this was a punt and restrict my bet size to £1. I was sufficiently confident in the trade to set a limit order at 133.60, just above Monday's low, but not to bother with a stop loss order. Yes, I know it's madness, but that's the point here. The outcome of this trade was pretty much what I deserved. While I was out at the gym, my trade went briefly into profit, but nowhere near a limit order. When I got back, I still had one more chance to close out for a small gain, but I decided to roll the dice again. Then, as the price started to rise, I set a series of resistance points, each where I'd close out if the line was breached. In the end, the price moved back above a large Marabuzo line, and the 21-period moving average, before a break above 135 brought me to my senses. I closed out at 134.97, which was pretty much the high point of the morning. And as so often happens in these cases, the price then dropped back to my entry point. I'd given away £83 on that impulse trade, and I can't even claim it as gift aid. So what can I learn from this? Well, there's quite a list here, really. The trouble is, I should know it all. First off, I shouldn't enter a trade without planning the exit, especially the stop loss side. Secondly, there's nothing wrong with taking a view on the market, but I should have chosen a more sensible entry point. Selling sterling yen wasn't wrong. It was selling it at that time at that level that was so wrong. Even the most basic analysis would have told me not to sell at the tail end of a long red candle. Nearly every day I talk about using 50% retracements, and yet on this occasion I ignored it. Even though I didn't initially enter a stop loss, I should have chosen one level of resistance which, if broken, closed the trade automatically. Had I used a break of the Marabuzo line, I would have closed out for a loss of around £38. A close above the 21-period moving average would have got me out for a loss of £67. So was there any good news to end on here? Well, yes, sort of. It was a series of stupid mistakes, but I was lucky to make them on a £1 punt rather than on a more typical bet size. And also, although my timing and closing the bet was lousy, at least I did. I could have stubbornly run the trade, and it would have been another 100 points offside the following day. So all in all, perhaps a useful jab in the ribs that wasn't too painful. Have a good weekend.